What's going on, guys? Welcome back to the channel. Today I just want to go over some shorting strategies with you. So this is going to be a VWAP rejection strategy. So what we're going to talk about here is what happens if the volume weighted average price starts to act as resistance instead of support, because what will happen a lot of times is stocks will break out and they'll use the volume weighted average price as support. So people will kind of, once it breaks this, the volume will start to increase. You can see the explosion in volume once it breaks this blue line, which is the volume weighted average price, right? And as this thing breaks out, you have kind of a burst in long volume, and then once the shorts start getting in at the top and the shorts start taking over, they generally will slow down once it gets to the VWAP, and the longs will start to come in. So what you want to see here, in order to stop yourself from getting in short at the top, or trying to, or I should say shorting it once it gets to the VWAP after this move from the top, because a lot of times people that are shorting the top are not looking to hold this thing all the way down. They're looking to short it and then get out at the VWAP, thinking that you might have buyers stepping in, which is why you have these candles here, right? Because you have buyers stepping in. Yeah, it's not good. You have buyers stepping in here at the VWAP, pushing this thing higher. So for a few minutes, this thing looks like, hey, and then here you have a little bit of a breakout, right? Breakout over 15, looking like, hey, this might want to retest the highs. So you want to be careful, because a lot of times these will break back out again, right? But in this case, you see the rejection at the VWAP, and that's where you want to be shorting, is in these areas here. Obviously, you can see I was shorting it down here mainly because I was focused on EVOL at the time, and I didn't see this until after. So the overall strategy, though, like on EVOL today, is you want to wait to see weakness. So once you see weakness here at this topping tail, once this thing rips up, gets halted at 471, or 471, 472, and then it opens just around 5, breaks 5, goes to 550, and then hits resistance. So this level of resistance here at 550 is where the shorts are looking to get in, and you can tell by the volume. You can see this volume here. Even after it opened, you probably had a bunch of longs, and then people just started getting short, and then you had the longs take over for a second, hoping to push this thing into another halt. So this is sympathy momentum, hoping to carry this momentum and push into another halt. But you can see that these candles here, the volume is just so much lower than it is once you start getting into the short, once the shorts start getting in. So that's why these candles probably had no short interest, but once it started to break out, through these levels, and this thing did have a catalyst because it reported better earnings than expected, but it wasn't anything, anything too crazy, and this stock is still a penny stock. So you're still looking at a stock that, is probably not going to be going up 70, 80, 100% in a day. It went up almost 70%, maybe 70% at the top. So then once it hit there, all these shorts are thinking, okay, this thing has probably had its run. Let's kind of hammer it down at 550, and that's what happens. But then you want to see what happens at the VWAP, and you see here, you have a little bit of a bounce. So the VWAP starts to act as support, and this is a pretty decent candle. But this one here, you see the buying volume is just not there, and that's because all the shorts are waiting, right? They're like, okay, what's going to happen? Is this thing going to try to retest 550? As soon as they see it starting to stall and it can't break that level, it rejects. I get in short. Once it breaks the low of this candle here, I get in short. So basically right at $5, I get in short, with my stop now being the VWAP, right, which is about 515, 520. So that's my stop now. And I start to look to add more if this thing continues lower or comes up a little bit and gives me, a price closer to the VWAP where I can add, giving me a better cost basis. But in this case, I just added as it went lower because it never came back up. So once it starts to reject and I get that initial rejection down to the 70s and the 50s, I take my shares, cover my shares. So that's almost 10% from the top there on half my shares. And then I wait for it to give me a bounce, and then I get back in short, now, because now it breaks the 50s, and I'm thinking, okay, now 50 is going to act as support, so I want to get in around the 50 level, and then I hammer it down into the 30s and then the 20s. And then I cover, knowing that, this $4, 420 area, 415 might start acting as support, so I don't want to be caught in this thing if it reverses, right? So I wanted to be taking my profits when they were given to me and making it a green trade. And this is the thing about shorting, is that a lot of times you can have quick reversals. So you want to be taking your profits as it goes down. As you get big flushes like these, you want to be taking your profits. You know, obviously it would have been nice if I would have held into this 415 flush, but you don't know that's going to happen. So it flushed down all the way from like 440 to 420, and I took my shares at 424, hoping or thinking that that might be the, 425 might start acting as support. So I want to cover and not be caught in an upward move, because I'm already up almost 7% or 8% on my shares at that point, right? So this is the strategy for shorting, is a lot of times this VWAP rejection. So once the VWAP starts acting as support, but then you see this kind of weakness start acting, and 550 starts acting as resistance. This VWAP then tries to act as support but rejects. So this rejection here, shown by the high volume and the fact that it just immediately flushed through 5, gives you an idea that this thing is showing weakness, and you can try to get in for the short with your stop being at the VWAP. So that's kind of the overall strategy, right? You want to wait to see some of these stocks when they're going up huge, if especially if they have no news, or if the news is really not that impressive. You want to be waiting for an opportunity to hammer it at the top, or at least close to the top, but you want to give yourself a good idea of where to get out if it goes against you. And that's why this VWAP rejection strategy gives you the best risk management, because it gives you the ability to get in as close to the VWAP as you can, knowing that that's going to be my stop. But a lot of times what will happen is that stocks that are really strong, they'll reject, they'll start to consolidate, and then they'll come back against you. So you have to be able to have the knowledge to know that this thing could come against me. So I need to be able to cover if it does break through the VWAP, have that ability to understand this thing can rip higher. So I want to be able to get out, but at the same time understand that you want to be able to give it to this VWAP. You don't want to be getting out too early. You don't want to be, selling your shares once you see it move up to 90 or, test this $5. You want to be giving it to the VWAP, because that level is going to be your level of resistance now. Because before, when it was acting as support here, now it's going to act as resistance. So anytime it comes up to it, and you can see these levels when it tries, it like gets close, but then it rejects, right? And anytime it tries to come close to that level, it's getting rejected, which is showing you weakness, which means you can start to look for another move to the downside, which is why in these areas you can be shorting it here at 450. Just like I was saying, here when I was looking at 450 as, it was acting as support for a second, but then once it broke, it was going to start acting as resistance. So that's where you want to be looking at these areas and kind of taking your trades around them at the half and whole dollar levels, and then trying to look to cover in those areas and see if those areas act as support or resistance. And if they show weakness, then maybe hold and then cover once it breaks that level, so that you kind of get a little extra profit on some of your shares. So that's the strategy overall. I don't want this video to be too long. It's really simple. What you want to try to avoid is kind of what I did here, and understand that when I was trading this, I'm trading it because TCAT is trading in sympathy to OCG. So when I was trading OCG, I was really trading TCAT because I couldn't get shares to short of TCAT. So I'm trying to short this as this thing's moving lower. So it kind of didn't work as well as I'd hoped. I still was profitable on it, but only a few dollars. I didn't make anything crazy. And that's basically because of commissions. I probably made like $20 on it, but after commissions, it's really like a few dollars. So it wasn't a great trade, but you can see that the idea is still the same. I'm trying to get in as close to the VWAP as I can and give this, and this is the problem with not, I should have basically just held these shares instead of giving them, because what's happening here is I keep stopping out once it breaks above my kind of areas where I'm getting in, thinking, okay, it's going to break 13. It kept breaking 13 and then getting rejected. So I eventually got in short at the top around 13.30, and I was able to catch a decent move to the downside, almost $1 a share. And that's the thing, is cutting your losers quicker than your winners, which is one of the reasons why, you know, yeah, this wasn't a great trade necessarily, but because I cut a lot of my losers short, you know, if I would have held some of these shares down here and covered all the way at the top, it wouldn't have been great. So a lot of times I will cover quickly, knowing that if it's running against me, I want to be able to get out, but be able to get back in if I see weakness again. And this is kind of just the idea of this strategy, is that the VWAP is going to act as resistance, so you want to be able to kind of use that as a level of resistance and a level where you're going to get out if it kind of goes towards that level. But obviously, if you have, the problem with me is a lot of times I don't have the amount of capital to get in and then add to my position at higher levels. Like if I could have added to my position up here, instead of, a lot of times I can't do that because my shares, I end up maxing out my share size, so I have to cover in order to add at the top. So I don't want to be holding for a huge move up and then covering at the top and then re-adding at the top, because then I'm basically giving myself a huge loss. So anyway, sorry about overcomplicating that part because it's kind of not necessary. But the idea here is that, you know, the VWAP strategy is a strategy that works, but you really need to understand that you need to see weakness and it needs to give you that follow through, and then you need to see it start breaking those lows. So this level here of 475 needs to break for you to get that lower move, and then for you to realize that this thing's probably going to keep selling off. Because if this thing consolidates and then starts to move higher, you don't want to be holding it. These things can consolidate and then rip higher, because there's such low float and because there's so much, you know, interest in trying to pump these penny stocks. You have to be willing to cut your losses if it comes back up to the VWAP. But if it doesn't, then you can just sit and hold and wait and just cover, right? Like if you would have just held this thing all day, right, you would have covered at 410 probably from $5 and been up 90 cents a share, right? So that's the strategy, and this is the strategy that is very profitable. A lot of people do it. The biggest problem is getting shares to short. A lot of times these penny stocks, it's really hard to get shares to short. I would make a lot more money if I could get shares to short on a lot of these stocks, like TCAT. You know, if I could have shorted that, I would have made money instead of trying to short OCG and making a little bit. But you know, nothing, not as much. Definitely not as much as I made on EVOL. This was a really nice trade, and this is basically my strategy to a T. So that's this video. Thanks for watching, guys. Feel free to like and subscribe. Let me know what you guys think about this video. Sorry for kind of rambling a little bit there, but I just want to kind of give you guys my thought process when I'm in these trades and kind of what ends up happening sometimes when you try to get in and then, you know, get out too early, or if you're not respecting the VWAP as a stop. You need to give it to the VWAP, allow it to hit that VWAP, and that's why it's good to get in as close to it as you can. That way you're not being all stressed and kind of once it starts to get there because you're down, you know, 10% or something or whatever. You want to be able to get in as close as can, so you're not too stressed if it gives you that kind of VWAP push and then rejection, right? So anyway, it would have, obviously OCG would have been nice for me to just hold from these levels now when you're looking at it at 11.35 and whatever, right? But I did take my profits a little too early, definitely too early. But like I said, these things tend to reverse, and you know, you have these huge candles up. Like look at this, goes from 11.50 all the way to 12.30, right? Like that's crazy, 80 cents a share in 1 second, and you never know when that's going to happen. So you want to lock in your profits when you get these big flushes, and that's kind of something I just want to, you know, get you guys to think about, is that when you're shorting, you want to be able to get in as close to the VWAP and cover when you have these big pushes. And obviously it's nice to be able to hold for a big move lower, but a lot of times green is good. Take your profits when you get them, and you can always live to short another day. All right, have a good one, guys. Bye bye.